Hello everyone. It looks like there is a consensus among large group of analysts expecting a so-called Fed pivot in a near future. I think it has already begun, we are simply looking for it in a wrong place. Let's talk, maybe this will help you to reposition yourself for the nearest future. Let's define the term Fed pivot. Generally, Fed pivot means a policy reversal by the Federal Reserve. Away from the tightening and towards easing. If in the last 6 months, Fed was withdrawing financial assistance from the economy and raising rates. Pivot would mean lowering interest rates and possibly injecting money back into the economy. Given the current attention to Federal Reserve and inflation levels, I do not see an imminent policy change by the Fed. Biden administration is under the microscope for its handling of the inflation, and any more stimulus from the Federal Reserve would not work before midterm elections from the political angle. Besides, most of the Fed members are publicly stating their commitment to further continue tightening. New York Times writes. Federal Reserve officials on Tuesday made clear that they expected to continue raising rates to try to choke off the most rapid inflation in decades, putting them at odds with investors who had become more sanguine about the outlook for interest rate moves. Stocks prices rose following the Fed's meeting last week, as investors celebrated what some interpreted as a pivot. Jerome Powell, the Fed chair, said the central bank would begin making rate decisions on a meeting-by-meeting basis, which Wall Street took as a signal that its rate moves might soon slow down. But a chorus of Fed officials has since made clear that a lurch away from rate increases is not yet in the cards. And yet, investors are betting against these statements. Stock market had a broad rally in the last few weeks. S&P is back over 4,000 level, Nasdaq and Russell are doing well. Precious metals, especially gold and silver, are up significantly from their July lows. Silver is up over 10%. So what is driving the entire market? I think the answer relates to Inflation Reduction Act. A new spending bill that has replaced Build Back Better $2 trillion behemoth. Let me explain. I would like to emphasize the description of this legislature as a spending bill. I think this clearly indicates the intent and direction of this act. We will take it apart and see why it is good news for gold and silver. First, let's get some facts about Inflation Reduction Act. Here is a summary of the document published by Senate Democrats at democrats.senate.gov if you would like to see an original document. As you can see, this bill proposes $739 billion in revenue and $433 billion in spendings. Remaining $300 billion would go towards reduction of the budget deficit. Looks like a solid piece of legislature. We will come back to these numbers, it will be important. But first let's address the elephant in the room. The bill is called Inflation Reduction Act. But does it actually reduce inflation? Let's take a look at this article Yahoo Finance. So, will it reduce inflation? The Penn-Wharton budget model delivered a blow to the effort by predicting it would slightly increase inflation until 2024 and then decrease it afterwards. In total, the group says it has little confidence it will impact inflation at all in either direction. The Committee for a Responsible Federal Budget pushed back directly against Penn-Wharton while acknowledging that the Inflation Reduction Act wouldn't drastically cut inflation. This bill is not going to get us from 9% inflation down to the 2% to 3%, the target range for the Fed, Mark Goldwine, a senior director at the committee. Goldwine, who supports the bill, argued that it aims to make the Federal Reserve's job just a little bit easier so that they can fight inflation with fiscal policy moving in the same direction. As we can see, there is a little agreement about the outcome and impact on inflation. Even supporters acknowledge a minimal impact at best. It looks like this Inflation Reduction Act is actually not intended to reduce inflation. But what does it do if not fighting inflation? Let's go back to the summary published by Congress Democrats. The Inflation Reduction Act of 2022 will make a historic down payment on deficit reduction to fight inflation, invest in domestic energy production and manufacturing, and reduce carbon emissions by roughly 40% by 2030. The bill will also finally allow Medicare to negotiate for prescription drug prices and extend the expanded Affordable Care Act program for 3 years, through 2025. First off, you have to love the writing style. Historic down payment towards some faraway targets in 2030. To put it plainly, this is 8 years from now. Let's do a simple experiment and use inflation calculator. If we allow inflation to run for 8 years at 8%, we will lose 50% of our purchasing power. Even if this act will work as intended and would reduce inflation gradually, the length of time inflation persists will erode your purchasing power substantially. And the big caveat is if this will work as intended. As you can see, income from this bill is projected to come from 15% corporate income tax and from IRS enforcement. Firstly, they do not mention the fact that they are planning to expand staff at IRS substantially. This will have huge costs to the taxpayer, while incomes and profits would likely decline in the upcoming recession, reducing revenue projections. So much for that $300 billion surplus. And by the way, if you think they will need thousands of new IRS agents to go after few billionaires in US, think again. I will leave it to your imagination. But we can just trust Janet Yellen projections. Here is her letter published on US Department of the Treasury website. Secretary of the Treasury Janet L. Yellen, Inflation Reduction Act won't raise taxes on families earning less than $400,000 a year. She is never wrong, her record is very impressive. The Inflation Reduction Act of 2022 makes health insurance and prescription drugs more affordable, invests in addressing climate change, and closes tax loopholes for the rich and large corporations. The legislation would either reduce or have no effect on the taxes due or paid by any family with income less than $400,000 and is fully consistent with the President's pledge. In fact, the clean energy tax credits and the expanded premium tax credit will cut taxes for millions of Americans. Again, not much about inflation. Climate change, tax credits. The Inflation Reduction Act also invests $369 billion in energy security and addressing climate change, including through the extension and expansion of many existing renewable energy credits and the creation of new tax credits for investments in clean energy technologies or energy production. It provides consumer tax credits for home energy efficiency improvements and for the purchase of clean vehicles, and extends and expands the existing production tax credits and investment tax credits for businesses to support investments in energy storage technologies, renewable energy sources such as solar and wind power, clean vehicles and charging stations, and fuels such as clean hydrogen. I didn't see that many hydrogen vehicles on the roads, but maybe they are hiding when I am out and about. All this green energy push might end up being very beneficial for silver, copper and other metals and commodities. I didn't read the entire bill, it is 700 pages long, but if they are serious about investments into the infrastructure, demand for metals will shoot up. That's why I think this bill will be a benefit for gold and silver, aside from copper, nickel, platinum and so forth. The bottom line, we have a new spending bill, and it is being sold as inflation reduction measure to avoid pushback. Here I am coming back to my original thesis. Fed pivot has begun, but this time it's not the Federal Reserve, but Congress and government will be doing the stimulus. Same effect, but different avenue. We were kind of conditioned to keep an eye on Federal Reserve, expecting buying of assets, lowering rates and so forth. But the political reality is that Fed is under pressure and will not be able to do much until inflation is within their stated goal for 2022, which is apparently at 3.5% at the moment. Based on what we are hearing, and the number of Fed meetings left, it looks like we will not be able to hit that 3.5% target until the end of 2022 or later. Given the latest rise in unemployment claims and slowing of the wide economy, someone will have to step up to prop the economy, and it will be the Congress and US government. And as we see with new scaled-down Build Back Better spending bill, wheels are starting to turn in Washington. So if we are open-minded, we might see the so-called Fed pivot is already here. That is what the market is sensing. That's why stocks, gold, silver rally. That's why dollar is slipping. Market is sensing a new round of easing. Congress and government are seeing what we are seeing. Economy is slowing down, tax revenues are very likely to tank as recession unfolds. If no new stimulus is given, economy might plunge into a recession in earnest. Maybe even deflation. Fed is targeting inflation, so its pivot to more simulative stance is very unlikely, or we will have a very real hyperinflation. Unless we have a new black swan event, however. In this case it will be another all-out effort and Fed would be justified in direct involvement in money issuance. What can that new black swan event be like? Maybe like escalation with China? Conveniently, it looks like we have one brewing with Pelosi doing that stunt with Taiwan. Maybe it was not that senseless after all? So it might be a good batch of news for the current gold and silver stackers. If we have another round of stimulus, gold and silver, along with everything else, will go higher. Remember 2020? Thank you for watching. If you like this content, please subscribe and like. If you have any thoughts, you can drop a line in the comments, I would love to hear your opinion. Until next time.